Welcome to Trading Lounge and the US indices for Friday the 25th of February, and prayers for Ukraine at the moment. So with the S&P 500 here, now we're looking from this wave 2 low here to wave 3 here. We were looking for a pullback to the 38.2% retracement level, so roughly 4,100. So we've kind of bit rough there with that line, but basically we've got that sort of roughly in line. Get it straight. So yeah, so is that it, or do we go down further, and can we go long, and how do we go long? We know that the stochastics is on the weekly chart here is coming lower. We don't always know that it gets a nice turn like this here and this here. I remember in both cases here we worked the lows here, yeah, but in both cases we used the medium level here as a classic trading levels pattern to go long, and that's what we did, and that worked. So we didn't get the lows, or we basically we counted down and got the lows, but we couldn't confirm, and that was pretty scary at the time. We couldn't confirm that they were the lows, but in terms of trading and looking for a safe trade, we look for support with the classic trading levels pattern on these levels at those times, So this is what we'll do again here as well. Now here it's even here it's got a bit of a dog leg in here as well. So this is what you need to be careful with the stochastic. So nothing's perfect, and you just need to strengthen your case and wherever you are, and it's always slightly different. So yeah. So anyway, we just go in here and investigate what we need to look at today. So on the daily chart here. So there's different ways to count this. So I was looking at an expanded flat, which is an A wave here, a B wave up here, and then a C wave coming down. Now obviously it's come a long way down, but still it's at its 38.2% retracement level here. And on the daily we noted that it was also sort of gearing up here as well. It doesn't mean it's the final low, but I can look at it in a couple of different ways, but in a nutshell, we can look at this as an A and a B and a C. I know it's a bit of a long shot, and people will chuck stuff at me for that, but we could also look at it as a WXY as well, and look at all of this as the W to here, the X here, and the Y here, and be finished at that point, and we'll look at that as well. So if I look at it this way here, we're still one wave short to the downside here. So let's just sort of finish this. We'll just go through the story. So on the 4-hour chart here, yesterday we were looking at, just clean this up a little bit. So yesterday we were looking for wave 5 of 3 here, because I was going 1, 2, 3, 4 and 5 here for the third wave, and the fourth wave, which can come back to the fourth wave of 1 lesser degree. That would leave us down here with one more wave to come down through to here. So also, first of all, the wave 4 here, if we just work through this for a moment, so we take the top of wave 2, drop it down to wave 3 there, we can see we're really on that 38.2% retracement level here now for that. Right, so that's that. And also what I normally do as well is use the wave 4 of 1 less degree, top or bottom, depending if you're going long or short, and the 38.2, and that gives you the range basically that the wave 4 can come back into. So realistically we're really in the right space for all of this, and also too, to help this, if this was going to move down, this is where it would move down from to finish that off. Now would that be the low at that point? Well, we'd also need to be careful as well, because there's a lot of bearish counts out there, and we can take them on board as well, but I like to work through this first, because I could certainly be wrong, but I'll just like to take one step at a time and not get sort of too emotional about it. If we get another 5 waves down here, for example, and we count the 5 waves down, well then anything below that well, then we'd need to open up the picture again into a bigger picture. So I won't go into that today because we're not there yet, but I think we have looked at that in some way or another. Now, yeah, so it's kind of interesting when we go from B to C here, because if you look at the Dow Jones made a new high here over this one. So I'll just bring this over for a moment. It's just sort of worth looking at. So in this case, we've got an A and a B, and then 1 and 2 and 3 and 4 and 5 here for the C of B. So a really nice B wave in that case. And in this case, we can count 1, 2, 3, 4 and 5 down. You might be able to put that wave 4 over here, but still, we've got that 5-wave structure there. So in this case, I mean, we could, the low can be in here as wave 5 of wave C or 4 here. That could be in here. How else could we count? We could also put wave 1 over here, couldn't we? And look at all of this down here as just wave 1 here coming down on the bearish side, and then coming back up here for wave 2 at that point, So that at 61.8%, so that's all doable at that point. So we'll need to just keep an eye on that as well. Yeah, but the reason we had a look at this Dow Jones before, and just showing it because it's just got 5 waves down, and that's completed at that point. So anyway, we'll just keep an eye on that, and we'll just check out the rally. And when they drop like this, they come back up and meet supply. I've got this trend line in here, but we can just get rid of that as well. But this block here is the supply, and then we can gravitate to the closest largest number, which would be the 33,500. So that's going to be the resistance for this market. So really, yeah, I mean, the whole thing is in a weak spot, but yeah, to turn bullish, we would need to see an impulse wave. Would need to see 5 waves up here, which we don't have yet in these markets. So it's possible that we can get them, and if we do get them, then we'll be looking for an ABC back, and then we'll be looking to go long on top of the B wave here in that case, and we'll also be looking for classic trading levels pattern on certain levels, but we'll speak more about that in a moment. So yeah, we could have it like this, and it can turn and come back down. There's, we can look at this as 3 waves to the upside. I mean, this at the trading levels, we've got 4,000, which is a medium level. Our target to the downside was 4,100. So we're at our target, but we're just sort of 1 wave short. We could count that differently, and we'll look at that. But still, if I was going to go long here, I would want to see at this stage, I'd want to see, it would be like this here. We'd want to see a classic trading levels pattern sitting on top of group 1. If you know me in the trading levels, then you'll know that the top of minor group 1 of, if we get support on 300, then the market's not going to be pulled back to 400, it'll be pulled to 500, and we'll be looking for a pattern like this here. So if that's the 300 here, we're here at the moment, we need to be over here. So we'll pick this up next session and take it from that point. But if you can see that in the meantime, well, then that's great. The other side to this too, if we were looking at this being actually completed down here, which is also doable, then we can just look at it as a WXY. So a W here, an X here, and then a Y here with an A and a B and 5 waves for the C, 1, 2, 3, 4, 5 here, and we're done. So that's possible, but it doesn't really matter. It's the same. It's the same thing that we need here as well. We need that. We need that 5 waves to the upside here. That's what we're looking for. That's what we need. We need that impulse wave. Yeah, so there we go. It's possible for this to be in play here. It's also possible for it to continue down, but we need to build a case to the upside, and just to rehash, we need an impulse wave to the upside to confirm, because if we get 5 waves in the opposite direction of the trend, which is down, then we'll get 3 waves back, and then we'll push up again from that point. So that's it really in a bit of a nutshell. We've just got to see what we get and build a case on that. So yeah, just to recap a little bit on this, is that if we do come down through here and we get a wave down here, which is probably likely, then then we'll have that wave 5 sitting here of wave C of wave 4. Now anything below that, and then it opens up a bigger can of worms at that point. So and we'll look at that in due course. So as I've said before, if the 4,000 becomes the retested resistance, then like this, having the first low below the level and then takes that out, then we'll look at being we'll look at the bigger picture at that point, another degree higher at that stage. So really that's that. We'll just see what we get, and it's the same with the NASDAQ. The NASDAQ was a little bit of a concern to me, because if we viewed this as wave 1 and 2 here, as we have done, and then looking at wave 3 to the upside here, then this wave 4 here can't overlap wave 1 here, not of this degree of structure. So that low really needs to stay in place there. If that's breached, then that's invalidated at that point, and then what we would have to do is we would have to look at all of this here being 5 waves up in one way or another. We would have to squish it in there and look at it differently. Unless we did something else, which would be looking at wave 1 here and 2 here and 3 here and 4 here, and looking for a deeper retracement at that level. But I don't want to go into all that at the moment. That still leaves that current at 38.2. So yeah, the main point is that if we cross over this here, this top here, then we need to look at that a little bit differently. So we'll keep that in mind, which we did yesterday as well. So, but just drilling in here, we can look at this as being completed here as a WXY on the 13,000, and we were looking for the market to come down and bounce off that yesterday. So that's the case there. Is that the low? I don't know. Excuse me. And once again, we need to get 5 waves up off the low. That's the only way I know how to resolve the situation. So onto the intraday with this. So we can look at it as a W, X and Y here, with an A and a B and 1, 2, 3, 4, 5. Could we look at this in different, could I look at this as wave 1 here and 2 here, and all of this is wave 3? Possibly, but this wave 4 is just starting to nip in on this wave 1 low here at this point. So yeah, the other way we could look at this is down for 1 and back for 2, and down for 1 and back for 2. So there's a whole variety of ways that we can look at it, but it just brings me back to looking at it. Let's just go into the tick chart. I think I've got it on 2K tick here. Let's just bring in a bit more data here for this. 10's probably overkill, 2 might do the trick. Let's just get in a little bit more. Okay, so from the top here, I could look at it as a B wave, I could look at it as wave 4, I could look at it as wave X. So I was looking at it the same as the S&P coming down with 1 and 2 and 1 and 2 and 3 and 4 and 5 here. The wave 4 coming back here would be at the 14,000. Well, in fact, the 38.2 is a little bit below that. But I wouldn't hold that against it, because when markets sharply drop, they come back sharply, and there's nothing really, there's no big consolidation or volume turnover here to mirror it. Because markets, when they move down like this, when they come back up, they'll mirror to the other side. So this correction here, it will mirror something on the 14,000 here, you know, and then it's got a straight run to that point, and then it will mirror this block over here. Within reason, you know. So look, this can be a blue wave 4 here. I don't have 5 waves up here, I just have 3 waves up. But let's just imagine for a moment that you know, that we do get 5 waves up here, be something like this, and then we'd get an ABC coming back again, and then we'd go up again. So we've got sort of plenty of time, because we'd catch it. If we got those 5 waves here, we could buy the pullback here. At that point, we don't have to worry about wave B. In fact, all of this 14,000 here, group 1 above and group 2 below, that will be the swing range for this pattern here, the same as it was here as well. So we've got plenty of time to get in all of this. Don't think that you're missing anything if you're long now. I mean, you know, the first little impulse wave up here, if you saw that and you saw a correction here on this level here, whatever that is, 500, you know, 500 is the second strongest number, so we got 500 here. So you got a classic trading levels pattern at this point, the arrival, the reaction, the first high above the level, the ABC pattern over here, then refining it. So go long there, long there, long there, long there. You know, that's the perfect setup. So, and of course you could have done it down here further, but you may not have recognized the, you know, the 5-wave move up here at that particular point. So so we're just going to take a smaller version of that, but we don't see, I'm taking the 5 waves from here, even though that was the low there on that, because when the cash market opened, it dropped and then just went straight up from that point. So I'm thinking this is the low, but that still leaves us, it doesn't even matter at this point, but 1 and 2, and you can see this is a little longer here, so it's kind of looking like a third wave really, I have to say. So I'm kind of a little bit quietly positive, which would be a nice comeback to, you know, for the for the Ukraine Russian situation. But look, anyway, it doesn't really matter at this point if I call this a you know, an A and a B and a C down here as a WXY pattern, or we got one more move down. We're just looking for a way in on the long side, if that's going to deliver, or we'll look on the short side later. The short side later will come when, if we get this, if this is a wave 4, we get wave 5 down here, right? Then that can be the low. But if we get anything below that, you know, that's when we start to go short. That's when we'll go short, because there's a bigger picture happening at that point. But we need to confirm things and stuff along the way. So that's all we're doing, really. That's it in a nutshell. And the Russell here. So from the top here, I've been looking at this as 1 and 2 here, 5 waves down for the third wave. And then we've got an A and a B and a C for the fourth wave here. I thought it would come a bit lower, but we have taken that low out here for this. So in a bit of a nutshell here, all we need to do is that from the top here to here, this is the 2000 is roughly the 50-60% retracement level. So if we get a classic trading levels pattern here, well, then we'll also look to go long here as well. So we would need that set up at this level to go long across here. That's it in a nutshell. We can go and have a look at this on 1K tick here for a moment. But yeah, it's just really all about that. So, but in this case here, it's kind of interesting. So we've got our A, B, C here. We knew that if this was breached here, then we would make a lower below here. Now we have made a low below here, but not very much, but enough though. And I was counting down, as you may know, as wave 1 and 2 here, and then 1 and 2 here, and then going down for the third wave here. So I was going okay, then we had the bounce back. So it's possible to count this here now as wave 1, 2, 3, 4, and 5. Now there is a bit of an overlap on 1 and 4, but that's very common when you're working with large numbers, because the large number pulls the market towards it all the time. So it can skew the counts up a bit. The other way to look at, well, how else would you look at this then, you know? That's what I want to know, because you could look at it, well, the other way you could look at it really is putting wave 1 over here and wave 2 here, but you'd still have wave 4 and 1 overlapping. And then if you look at this here, it's down for 1 here and back for 2 here, which you could, because it hasn't breached the top here, so you could do that as well. But that's also a little bit of a long shot as well in that case, you know. But here, let's just give it some time. Let's just see if we get our setup. Okay, so don't get too involved in anything in here, because you're just going to get carved up for sure, you know. We just need to wait for divine timing to bring us this over here for that. And it may occur and it may drop at that point. So just because we get that, and we get that, it doesn't mean that we're bullish. We still need to get this ABC here and take out that top there, or this top, because that confirms to us that the market has checked, retested this number here, and the orders have built up at that point and are moving higher. Alrighty, so I'll leave it at that. It's the same story for all of them. It doesn't mean that this is right. If we get it, then we do it. If we don't get it, well, then we'll be coming down again, and we'll need to reassess the situation. But yeah, this market is the same as the Dow Jones, as 1, 2, 3, 4, 5 in its own little way. It came down a bit deeper here. It hasn't really rallied much here, so this could certainly be corrective here. But yeah, let's just see how it all plays out. Yeah, so that's pretty much it at this stage. So just coming back to the S&P here, just to recover this a little bit, the same thing. So we either get 5 waves up here, which we don't have yet, and we may not get, but if we do get them, and then we get if we do get 5 waves, then we'll be looking to go long. If we don't get them, we only get 3 waves up here, well, then we'll be coming down for this last move here. And in this last move, there'll be 5 waves here. And once those 5 waves are finished, then we could go all the way up from that point. But then again, we still need to get 5 waves up here to confirm that. And any move below that 5 wave structure here, well, then there's a bigger Pandora's box opening, and we'll need to be flexible and adjust and move with it. So they're just waves in the ocean, and we just have to sit patiently until we catch one. Alrighty, thanks for tuning in. Cheers.